Ladies and gentlemen, a very warm welcome to you back on Business Today Television. On our Market Masters series, we get you to meet the finest fund managers, equity strategists, global investors, and top individuals who've made money in all sorts of environment, whether the painful one that we are going through now, bull markets, bear markets, or volatile markets. They've made tons and tons of money, people who followed them and for themselves on their own. We are now joined by Ms. Punita Kumar Sinha, Managing Partner at Pacific Paradigm Advisors. She's a person who's seen and traded and invested in markets for the last 3 decades and is the best person to go to understand the impact of this tariff war unleashed upon India by US President Mr. Donald Trump. A very good morning to you, Punita ji, and a very warm welcome. How do you react to this imposition of 25% tariffs plus penalties plus a lot of pain that has been inflicted by the US on the Indian economy?
So first of all, the latest I just saw is that there is still negotiations to be had, and the numbers of 25% are not final, right? So we don't know where it'll actually net out. But if it is indeed 25%, which I think after the negotiations may actually come down, then as we had widely expected, the export sector is the most negatively impacted. It will shave off maybe 0.2 to 0.5% of GDP growth in India as well. And, um, you know, and that means that the domestic consumption economy has to grow faster to offset this tariff increase if we want to maintain the growth rates that, above 6.5%. So that's like the, simple impact.
Okay. Punita ji, we've been told for the last 3 months or so that negotiations continue apace, and both sides have now, are rigid, to use the only word that comes to my mind. India refuses to open up agriculture and dairy, and the Americans are very keen that these sectors are opened for US companies. Now, given the fact that many nations, including richer ones than our country, have bent over backwards to America and done trade deals, but we'll stuck with 15% tariff, 20% tariff. We haven't done that, and we have 25%. So, is this a pyrrhic victory for India in the sense, what have the others got? A trade deal with 15-20% tariff? What have we got? No trade deal and a 25% tariff. How do you look at this argument?
So, China's taken a pretty hard stance with the US by talking about retaliatory tariffs. So, I think the deal with China is still not off, and China is obviously a bigger economy than ours and has much more to lose, is much more export oriented. And those negotiations are continuing and will tell us where things stand with China. With India, a lot of it is political and how trade negotiations are handled. But I would just say that, I was looking at the tariffs on some of the countries which have similar exports as ours, particularly, say, textiles. Bangladesh has higher tariffs than 25%. And so the closest competitors of ours on some of these products that we sell to the US are also facing similar tariffs. So I think it's important to compare that as well to see whether we would be losers um, in selling those despite the tariff. Now, of course, that means somebody is going to get negatively impacted, and that could be the US consumer. Because if they don't have manufacturing set up within the US, or they don't have other countries to get these goods from, then those companies, will either have to bite it or pass it on to consumers. So I think we have to wait and see where we net out. But yes, in some areas we may face higher tariffs than what we have today, but those tariffs should be compared to the countries that are exporting similar similar goods as ours, and the tariffs that they are getting on similar goods.
Okay, we'll come to stock picking a little later. I would like to get your view on the nature of this discourse that is happening. You know, labeling India as a dead economy, calling names to the U.S. Federal Reserve Chairman, uh, publicly berating the people who haven't who don't have the same thought process as yours doesn't behove a US president, does it?
Well, I'm not going to comment on anything political on the channel. I think, in my view, some of this are negotiating tactics and also rhetoric for the American, voter.
Fair point. Okay, let's discuss the macroeconomic picture. Yesterday, the U.S. Federal Reserve held rates steady and said that even in September they won't be moving much in terms of where interest costs are, simply because they still have to work out the impact of tariffs on the US economy and, of course, its direct correlation with inflation. Now, how do you read this, the Federal Reserve move for the global economy?
Yes, so I think, as I said earlier, that tariffs could be passed on to consumers in America, and that would mean higher inflation. So the tariffs can be inflationary unless the companies themselves who are importing these goods eat the increased cost and do not pass it on to the consumers. And if that happens, then one could expect inflation to be tamer and rates to be cut. Um, and of course, President Trump is talking about corporate tax cuts. And if the companies indeed eat some of these tariffs, then they may get, benefit from the corporate tax cut. And so net, they're not negatively impacted. In that case, the consumer in America wouldn't be negatively impacted either. And inflation may be more benign. And so I think we just have to wait and see very carefully what the inflation data is looking like. And that would mean whether we have a rate cut or not. As I saw the Fed Watch, the probability of a rate cut now for September, which was about 60% earlier, is down to about 39% the last I saw. So while people are expecting a rate cut, the probability is has lowered. Not dis so Indian companies that do borrow overseas. Actually, I was with an Indian company recently, and they were telling us that the ECB borrowings for them are now at the same or lower rate after hedging than borrowing in India. So, despite the fact that Indian rates have been cut, the hedging costs themselves had gone down because the widespread view is that the dollar would weaken against the rupee. And so companies have been still able to borrow and hedge at a net rate lower than what they might even get in India.
Fair point. Before we get to our domestic economy, I would just like to understand your macro view on the US economy. Record highs on the Nasdaq, S&P 500. The dollar is weakening, as was perhaps thought of by this administration, and countries bending over backwards, economic black box blocks bending over backwards to please Mr. Trump. How do you see, maybe a 360 degree view of what has been the state of play in the United States?
So the US economy is actually doing better than expected, despite there being hardly any rate cuts. And the earnings have been actually coming in generally quite, good. In fact, India has had more mixed earnings results than what I think we've seen in the US. And so the markets have remained quite buoyant there as well. The only negative, of course, has been what is inflation going to do? What are interest rates going to do? The bond yields have been spiking this year. They finally look like they may have stabilized after the Fed commentary, but they've been going up. The geopolitics has been kind of playing a negative impact on the macro predictions. Um, there, of course, are some concerns that the US economy might be slowing. There may be the next few quarters data may point to a slightly weaker economic condition, and that might lead to rate cuts as well. Employment, which was expected to be worse than it is, employment is actually quite okay right now. They were expecting higher unemployment, which has come in lower than expected, which also has led the Fed to pause and not to cut rates. So I think, barring the geopolitics, barring the impact of tariffs, the the U.S. economy is generally okay. But I think once all the tariffs go into place, that's when we will start really seeing the impact. So the impact will actually start coming in the fourth quarter, I think, and first quarter of next year. That's when we'll really see in the earnings and the results, and the unemployment data will actually be crucial to watch.
Okay. There is quiet in the Middle East as far as flare ups between Israel, Iran, and the other non state actors is concerned. Ukraine and Russia continue to trade bigger and bigger blows on a regular basis now. Do you think this 60-day deadline that Mr. Trump has given to both Russia and Ukraine to sort out their problem will actually hold?
I have no idea whether it'll hold or not. It just depends on what they can negotiate in terms of the benefits of a settlement between the two countries. The cause of the war hasn't gone away. So there has to be some good negotiation that is required to stop the war.
Okay. Now we'll focus on the domestic economy. In your opening comments, Punita ji, you mentioned that the local companies, local demand, government in particular, and of course, corporate India now needs to sort of pull up its socks to look at this negativity that is surrounding the export environment and make this work. To your understanding, and against the backdrop of first quarter earnings, what do you think are the three or four sectors which now may be on a fast track, or maybe sort of feeding their engines more fuel for stronger GDP?
So one is the growth, and the second is the valuation. So let's put the valuation aside, because some of this growth is probably already factored into valuations. So I think the engine that will grow the Indian economy has to be domestically led. It will not be export led in this environment, which is what I've been saying for a while. And we are fortunate to have, unlike some other countries, a very high domestic consumption base and foundation to build on. And we have a lot of young consumers in India, which are aspirational in nature and are going to be, continuously trending their spending upwards. And that makes India actually a very attractive um, consumer market, like the way US was several decades ago, where everyone wanted to export to the US. So we should not forget that fact that India is a market that a lot of countries would want to access our consumers. And so we need to really build upon that foundation. the domestic consumption story, I think, will be the engine of growth. Now, that could play out through many sectors. For instance, the easiest one is the healthcare sector, which includes hospitals, diagnostics, allied services, um, everything that goes along to support that sector. The other sectors obviously could be, financials, which are the backbone of any credit growth that is required to build upon this foundation. Fintechs are also seeing, strong transaction growth as well. And then I think government-led spending, infra, manufacturing, those are sectors that need to grow as well to keep up this foundation of growth. And of late, these sectors have demonstrated generally good earnings as well. And I think so these other sectors largely to focus on. Travel and tourism is another one. So there actually are a lot of different sectors. And I would say right now focusing back on valuations and where valuations are, it's the earnings have been mixed even within the same sector. Some companies have delivered and some companies have not, have disappointed. So it's not a thematic market where, just some sectors will go up. I think it's going to be about stock picking the companies that are doing better than others. So there'll be winners and losers in within the sectors as well. So it requires a lot more deep dive into those companies. And so I think that's the focus that we need to have, is to really be domestically focused and let the export-oriented companies figure this out. They'll come to an equilibrium at some point. As I said, they may not all be as impacted negatively, especially because if the peers, like say in textiles, in case of some companies, if Bangladesh is also being hit by tariffs, then the Indian companies may not lose as much as one had expected initially. Of course, they would all lose to some extent.
Yeah, I mean, I really don't want to get into the way Bangladesh has reacted, thanking President Trump for that 20% tariff, be that as it may. Let's focus inwards. Now, how do you see the rupee against this backdrop of the tariff war? Already we are headed towards record lows. Do you expect worst to happen in the remaining second half of FY 25-26?
See, I'm not a currency forecaster, so I don't want to hazard a guess. I think whenever there's uncertainty, then the rupee does weaken. So right now there is uncertainty on tariffs. So if it does weaken, it could be temporary, depending on how our economy shapes up and how the dollar reacts to generally other EM currencies.
Okay. Ma'am, two critical sectors were left untouched. $205 billion worth of software exports to the US and about $12 billion worth of pharma exports to the United States. They are under services and therefore they were left untouched. Your view on domestic IT against this positivity plus the negativity that is surrounding artificial intelligence, absolutely zero growth coming in fact negative growth on many top flight IT stocks. Is the Indian IT story now on the back burner?
I mean, I don't think it's totally on the back burner because there's nobody else to replace it other than AI to some extent in the US. And the rise of GCCs is still continuing. So there is still offshoring continuing. And I would say the story is not over. Maybe we'd have to price our services and package them slightly differently. I was talking to someone who said that even within India, AI is only leading to 20% productivity uh, gains, not as much as they had hoped. So it all depends on how AI is used, and not every company can be services, or every service can be replaced by AI. So I think right now, as I said, the US economy itself has been a little bit on weak. The geopolitics have been weighing, and all of this global tariff trade has been weighing on the companies themselves and their ability and desire to spend. And maybe the cut in IT budgets is some of the reason for these kind of earnings of Indian companies. But that could, once there's some more stability, that could change as well. And on
Okay.
pharma, I think
Ma'am, if
we
I were
we
to
have to wait.
ask you to step back, yeah, please
And I
continue.
said on pharma, I think we still have to wait, because the US EU negotiations on pharma will set the stage for what happens with the rest of the world. So I think there is equal probability that they could be exempted, but they could also come under the standard 25% tariff. I have no idea.
Ma'am, nobody has any idea yet. All of us have to invest, keeping in mind that retirements are getting costlier and costlier. I would request you to, stand back a bit and paint a picture of the Indian market. How do you see equities at this point of time against the backdrop of all that is happening? Weak Q1, falling rupee, a trade fight with the world's largest economy, two unstable borders, corporate India doing nothing in terms of adding fresh capacity. What is your gut feel about the Indian market now?
Well, despite that, the market seems to be trading at very high valuations. So the valuations, as you can see, are almost at the highs of the last several years. And so therefore, one has to be, as I said, selective, cautious. But given that India is still growing quite rapidly, and our consumption story is largely intact, that and our domestic pools of capital are very strong and flush with liquidity. So the reliance on FIIs is a lot lower. So I think that will be a very good, provide a very good support to the Indian markets. And while, I think to some many for many reasons, India will not be isolated from what happens across all other global markets as well. We are correlated. At the moment, the flows have gone from the foreign funds more towards the other ASEAN and EM countries and Europe as compared to India, because of the valuation disparity. So as we look forward on our earnings to FY27, then I think hopefully earnings numbers will look better, and the valuations will start discounting those earnings. At the moment, the earnings picture has been mixed. So we have to be selective given where valuations are. But the long-term story is still intact, regardless of what happens with tariffs.
Well, that's a bit heartening, but both of us studied an economist called John Maynard Keynes, and he said, in the long term, we are all dead, but let's hope we are dead richer than what we are now. With that background, Punita ji, one thing I would like to understand from you is in your India focused portfolio, are there any new additions that you have made over the last 5 odd months? Anything that you've booked out?
No, I mean, I don't want to talk specific stocks, but I think, as I said, one has been adding to domestic companies at the right valuations.
Okay. Okay, fair point. Any thoughts that you would have on the defense space, given the blowout that we have had with Pakistan in the month of May? Are those valuations attractive? I mean, they've gone up and they've come down as sharply as one would have imagined. At this level, how does the Indian defense sector in the listed space look to you?
I think that's a sector which will continuously see an increased spend by the government. So now the question is, will the government import, or will it use Indian defense companies to provide some of the equipment and the defense infrastructure that is required? So I think, again, one has to be selective. There'll be a mix, as I said, a lot of imports as well, but then how those trade deals go will impact that. But I would say it's a sector that, will see an increased spend.
Thank you, ma'am, for this wonderful discourse on the global picture, whether it's the U.S. Federal Reserve, whether it's U.S. inflation, tariff wars that are occupying our mind space, and of course, our domestic Indian markets along with the rupee. Thank you so much for your time. I hope you enjoyed the conversation as much as I did. Have a nice day.
Yes, very nice. Thank you.
That, ladies and gentlemen, was Ms. Punita Kumar Sinha, Managing Director at Pacific Paradigm Investors. She's a global watcher and investor across many markets, and her views matter most when the criticality of the Indo-US relationship is where it is at this point of time. Continue watching Business Today Television. There's a lot that's happening on the channel. I'll be back at 2:45 p.m. for the last 45 minutes of this 5-day trade. Nifty is flat. There's a bit of a green tick on Nifty Bank.
Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra, together we rise.
Hello and welcome. You're watching Business Today. This is Asta Chopra. Today we are talking about the Hurun's list, which has come up for the real estate this time. And for that, we have a very special guest with us, Mr. Anas, who